Good morning and welcome to today's RAAS Research Group Investor Webinar. I'm David Tasker, your host for this session. Today, we're shining a spotlight on Warriedar Resources ASX code WA8, a company rapidly building a compelling dual commodity story in gold and antimony, anchored by its flagship Golden Range project in Western Australia's Murchison region. We're beginning with a presentation from RAAS Analyst Josh Baker, who has recently published a comprehensive research report on Warriedar. Then we'll hear from Amanda Buckingham, Warriedar's Managing Director and CEO, for a company update. We'll finish with a Q&A session featuring both presenters, and I encourage you to submit your questions at any time using the Q&A function on your screen. Before we begin, please note that all content presented today is general in nature and does not constitute personal financial advice. Let's begin with RAAS Research Group's Joshua Baker, who will walk us through the Warriedar investment case, including his updated valuation, recent exploration success, and the growing relevance of antimony in a global supply-constrained environment. Josh, over to you.
Thanks, David, and hello, everyone, and thank you for joining. So the agenda for today is pretty much a condensed version of the initiation report we released earlier in the month. So we'll look at a quick intro into Warriedar, why we like it, focus on Golden Range, which is the flagship project, definitely highlight the flow sheet, given it's a key de-risking event in the project. Talk about antimony, and then we'll get stuck into the valuation, comps, risk and sensitivities. So we just go to that next slide, please. Warriedar is a gold and antimony focused junior whose flagship project is Golden Range, and it's in the Murchison region of WA, which for anyone who knows gold is a very prolific region, several operating mines, and it's been quite significant from a discovery standpoint as well. The company acquired the project or completed the acquisition in 2023 off the back of a board and management refresh that sort of occurred over 21-22, namely with Amanda joining as a director and ultimately becoming the MD and CEO in 22, and also with Mark Connolly joining as chair in late 22, who has a reputation that precedes him and is definitely associated with value creation opportunities in mining equities. There's also the Fields Find project, which is quite adjacent, but on a slightly different geological structure. Has gold and base metals, including a resource at the Rothschild deposit as well. And then the other key project in the stable is Big Springs, which is a US-based gold project, but I think at this stage it's considered non-core, and there's a likely chance of it being divested and monetized that way, so the company can focus on Golden Range. Next slide, please. So the key reasons why we like WA8 Warriedar, exploration. They've put a lot of money into the ground, built up a gold resource, delineated the antimony resource as well. And I find that element interesting in that they sort of had this evidence from a PhD report of it and had sort of looked at it, evaluated it and tested that, and it's been a very successful testing of that theory. Metallurgical test work completed over the last 9 months, has sort of de-risked the project as well, as it sort of highlights there are commercial pathways for development of this project as well, given the sulfide nature of the resource. Ongoing exploration remains attractive. There's 50 kilometres of currently planned drilling, with about 30 of it going into Ricardo alone. A lot of that will carry through into early next year and is definitely funded by the recent cash raise, which I know 27 million, but it's a shade under 25 given the quarterly update just this morning. There's also optionality inherent in the company with the existing infrastructure that was acquired with the project that's capable of milling oxide ore, and there's still a lot of oxide ore left, and the potential just to incrementally expand that with some of the exploration work that's been going on at M1 and Wyndham Well as well. And then obviously the value, or the new big value driver, is the antimony resource. 60,000 tonnes, it's a very good start. It also makes it somewhat globally significant at this scale. So there's upside to grow it, and notably a lot of it's in the open pit as well, which is not that common for antimony. It's usually associated with higher grade underground gold mines. Next slide, please. So Golden Range, as noted before, it was acquired in 2023, and through the exploration efforts of the company, they've built up the resource, going from about 800,000 to 1.4 million ounces. 1.1 of that is at Ricardo, which has effectively been doubled since acquisition. And as noted before, 60,000 tonne antimony resource has been defined, which is still growing. The initial metallurgical test work has demonstrated commercial processing options and marketable products as well. I think it's one thing to sort of highlight is that when you run concentrates or flotation to produce concentrates, there's a payability element. So the marketability of the product is as important as actually producing the product itself. There remains significant brown and greenfield exploration opportunities along the main shear zone structure that's within the tenements. Infills and extensions at Ricardo, adding gold and antimony. An update we saw earlier in the month as well highlighted there's thicker gold intercepts, higher grade tenure as well. So infill drilling has the potential to add incremental tonnage and grade, which delivers a high metal content as well. And that can offer improvements in unit economics of the project. There's clear scope for extensions at the Azure Coast set of deposits. So infilling along strike, testing strike extensions, depth as well, because it was not very well drilled below the oxide and transitional layers. And as some more recent work has shown, there is clearly an antimony potential there as well, of hopefully similar sort of scale of potential as Ricardo. And then more broadly along the structure, Wyndham Well M1 Bug-Eye can definitely add to gold resources, including oxide or free milling gold as well. And obviously the embedded infrastructure that offers a restart optionality that can generate significant cash flows in this gold price environment. Next slide, please. So as I've sort of highlighted several times and in the report, the flow sheet is probably a critical element of this project and a de-risking event. The image on the right of this slide comes from the initiation report, which highlights a simplified set of pathways for an sulfide gold ore body. The green highlights the likely pathway and the pathway we consider in our modelling for the project as well, which is a very typical flowsheet pathway for a sulfide ore body. So essentially, whilst there are some free milling gold elements, most of the gold is essentially as inclusions of pyrite. The inclusion is the important distinction rather than embedded. So true refractory, very difficult, is usually gold embedded in the matrix of the pyrite or the sulfide crystal. As an inclusion, it's sort of within but not embedded, which means it's easy to sort of crack open and extract through leaching without having to go through the steps of full oxidization processes and the like. So this ultimately leads us to think that, given it's generally an inclusion of pyrite, you can get away with a float, a fine grind, and then you leach the ground up concentrate. And generally you get very good recoveries or economic recoveries, and it's a process that's quite common. So if you think Okvau project run by Emerald up in Cambodia, very similar flow sheet. KCGM runs a very similar flow sheet as well. So it's something that works at various scales, various ore bodies across the world as well. This ultimately means that it has a lower technical risk and a modest cost impact compared to a typical free milling gold flow sheet that most people are generally quite known to. And yeah, just the ongoing work that has been done by the company has definitely de-risked and says this is a much more possible avenue. However, more work will be needed just to ensure that that is consistent across the ore body as well. Next slide, please. Antimony is definitely a critical mineral that's in vogue. It's a new discovery at the project that's been delineated under Warriedar. And as I mentioned before, it was hinted in a PhD thesis as something that's possible. 60,000 tonnes are defined. It offers meaningful value in a mining operation and is of a globally significant scale. Based on our modelling, there's roughly 30-35% of the value of or revenue generation is currently with the antimony, so that is quite meaningful on an economic basis to the company. Open pit makes it relatively unique, and the scope and scale of this resource is really just limited by drilling, as a lot of the current resource is defined by resampling of assays. Not all assays were available, and then through ongoing drilling and constant testing, you'll be able to better define and understand that resource as well. And notably on the metallurgy side, I probably haven't highlighted that well, is that as they've done more work, the mineralogy is getting a lot simpler in that it's just stibnite, which is very common, very well known, it floats quite well, as it's literally just antimony and sulfur, and then that concentrate should actually be quite clean and quite nice, and hopefully high grade as well, which leads to good payabilities. And then more exploration down the shear zone as your coast is quite prospective for antimony as well. And without touching on the nuances of it, just between a general emerging shortage that was occurring in early 24, and then with Chinese policies amplifying that and trying to contain as much antimony within their ecosystem, this has sort of pushed these shortages out to the rest of the world, which is why you've seen such a massive price rise in the commodity. And given its importance in military applications and the like, there's this elevated demand with a constrained supply, which should mean a relatively higher price for longer, which is what drives significant economic value for the company. Next slide, please. So in terms of the modelling, we've sort of centred the valuation around a mining operation just at the Ricardo mine as well. So we haven't really considered the satellite operations at this, or satellite mines at this stage. So essentially, we create a blended feed of the three domains, which is what's detailed in the resource updates from the company. So just under 20 million tonnes, a little over 1 gram gold and 0.3% antimony. Our mine plan runs for 10 years at feed rate of 2 million tonnes per annum, which delivers 908,000 ounces of payable metal. So not just produced metal, but payable, adjusted for payables, which is roughly 91,000 ounces per annum. So prices of 4,500 Aussie gold and 35 or just under 36,000 tonnes Aussie for antimony, get 4 bill of revenue, just under 2 bill of costs, a little over 2,000 ounce equivalent, 2 billion in cash flows, net cash flow of 1.34, and then post-tax with an NPV 15, which is quite aggressive discount rate, still get a 553 million valuation to FID. Next slide, please. So essentially, when we add this all up into a per share basis, we get a NAV of just under 27 cents on a sum of the parts basis. As one would expect, the Ricardo mine development drives most of that at 21 cents a share. When we sort of evaluate the gold resource on its own, plus antimony, based with two different peer sets, the value per ounce equivalent is effectively the same, but that adds another 2.7 and 1.1 cents respectively. And we've got this approach where we sort of put the core of the valuation under the mining scenario, but then also have adjustments or proportions based on the gold resource as well. And we think, just given the stage of the company, that's not a bad way to sort of blend the resource. Blend the different measures to create a valuation for the company. And then the rest of it sort of nets off at 2.1 cents to get there. So we just go to the last slide. Oh, sorry, second last slide. Peer comps. We've got a universe of 42 names, both antimony and gold names, advanced explorers through to emerging producers, developers. So it's a very representative set. There's clearly value in Warriedar as it trades at less than the average or the median to these peer sets. And one thing I would highlight is that there's definitely curves in it. Antimony less useful, but in the gold spaces alone, as you progress through development, you generally get re-rated if you prove economic outcomes. So there's clearly a pathway for the company's resources to be re-rated over time as well, as they sort of prove the commerciality of the project. To the next slide, please. So the key sensitivities, gold, antimony prices are the main ones. We model 4,500 and 36 respectively. Spot and gold is over 5, antimony is over 75. And the tricky one with antimony is what the payables are. It's an opaque market. The next biggest sort of sensitivity is the discount rate I use. So given just the early stage and the desktop study nature of the modelling, a higher discount rate sort of hedges what you don't know. And given there's still some moving parts on the flow sheet, which can drive CapEx and OpEx, that sort of helps hedge that uncertainty in what an actual operation could ultimately look like. And just highlighting the downside risk. If gold was to go down to 3,500 and antimony down to 30, the share price or our NAV or valuation would be 16 cents, and given that the shares traded about 11 and a half, there's still an asymmetric opportunity in the company right now. As I noted before, peer values are dynamic, but the curve generally holds. So as you continue to progress and add value through engineering, metallurgical work, you still can re-rate, even if pricing dynamics in those commodities sort of moderate. And on the technical side, I'll just reiterate that metallurgy is, I guess, the key risk to this project, as if, metallurgical work suggests you have to pre-treat with oxidize the ore. It's going to add some CapEx, it'll add some OpEx, and sort of just take the economics down a little bit. But ultimately, everyone should just go to the report if they get a chance, go to the sensitivity section. I've got a range of different sensitivities, and that'll give you a good idea of how that valuation changes based on prevailing pricing outcomes, discount rates, etc. Thank you.
Thanks, Josh. As I said at the beginning, Josh will be back at the end to be part of the Q&A. So if you've got any questions, please hold them for Josh a little bit later. But now it's my pleasure to welcome Amanda Buckingham, Managing Director and CEO of Warriedar Resources. Amanda will provide a strategic and operational update on the business, including the latest drilling results at Ricciardo and Azure Coast, metallurgical progress on the gold antimony flow sheet, and what's ahead for the company as it moves towards development studies. Amanda, over to you.
Thank you, David, and thank you, Josh. I must say I've really enjoyed working with Josh these past few months. I find it very valuable to have that dissection of Warriedar. We are out there drilling, rapidly advancing these resources, but there are so many aspects of this business and our pathway that there are multiple opportunities. So we just need to make sure we're always thinking ahead and always leaving pathways open. Now, look, ultimately, whatever pathway we go down, it needs to be underpinned by a solid, well understood gold resource, and that is exactly what we are focused on right now. So David, if you could move ahead 2 slides, please. I'm starting today with a very recent view of Ricciardo. Now, as you know, Ricciardo is our main deposit, the flagship deposit within the portfolio up in the Murchison. This drone photo was taken last Saturday. I was on site last week, and there's something magical about being up there. It is such a fantastic site. Yes, we have infrastructure and a good setup, but we have 3 rigs drilling into Ricciardo now. We have a 4th turning up, I believe, next week. And the important thing for us is that these rigs will stay. The next 6 months is all about drilling consistently, drilling for growth, drilling for high grade. We have the team and the funding in place to do that. And we are excited is not the right word, ecstatic to actually be here looking ahead with a view to significant growth, both at Ricciardo and several of the other deposits. Now, if I just talk you through Ricciardo for a moment, I'm a very visual person. I like to actually see what is in front of me. And here you're looking at Ricciardo, you're looking south down the Hall Road. It's quite a long deposit. It's about 2.3 kilometres long. There's a lot of scope for growth within the deposit. There are 6 historic pits. You can see Ardmore listed there. Now, we discovered last year that the Ardmore end, it is the sweet spot of Ricciardo. Higher grade, more continuous gold. It's where we've got the high grade antimony, and it's where we're drilling now. And I think you'll all like to know that we drilled 4 holes into the Ardmore end, 4 diamond holes in May. We put out one of those holes last week, hole 69. And actually there were so many good results, I made sure I had them in front of me. 24 metres at 1% antimony, up to 7% antimony. But we've still got the results from 3 holes that will be that are pending, but due very soon. And we are drilling into Ardmore now with 2 diamond rigs. If we just think about context, and actually, David, would you mind moving ahead? Ricciardo sits within the Southern Murchison. Our whole project, Golden Range, sits in the Southern Murchison. Now, the Murchison, I view it as that sort of underappreciated but very well endowed district. It is a world-class gold mining region. It's the home of Ramelius, Westgold, Spartan. And we own quite a compelling, commanding land position in the southern Murchison. We own 70 kilometres of a single mineralised shear, and large parts of that shear have not been explored adequately at all. So while we have our 2.3 million ounces of gold equivalent resource, we see the opportunity as remarkable for additional discoveries in addition to expansion of the resources we know about. And I think it's all about optionality. So yes, we have a solid resource, all on mining leases with significant infrastructure. We've demonstrated the growth potential, and we sit in a region that is well endowed and a region that has examples of profitable, successful mining companies. And that's the path we are putting ourselves on. We plan to be a long life, profitable, high margin, independent, standalone mining operation in the southern Murchison. The only way we can do that is by drilling aggressively, and that's what we're doing right now. Next slide, please. What do we look like? My board, it's a small but very effective board. I have Mark Connolly as the chairman. Mark has an excellent track record in terms of operations, finance, and really turning these sort of companies into real companies full of value. Likewise, Dearman is a mining engineer, and he's been instrumental in assisting us with, where do we drill? How do we grow these resources? What does it look like from a mining perspective? So look, a very effective board, and we're set up well for what we plan to achieve in terms of continued success. Importantly, we have just over $24 million in the bank, and most of that will go in the ground. We are very good at running this operation lean. We had 2 years of basically spending every dollar possible in the ground and delivering results. And that is the ethos or the approach that we will maintain. Sure, we're well funded, but most of that, every dollar is carefully assigned, and we plan to spend most of that money drilling and growing these resources. Next, please. Context. So Ricciardo, I showed you Ricciardo. It sits in the middle of what we call the golden corridor. Now, this is our strategy for growth, and many of you have seen this multiple times, and it will remain our strategy because it is working. So we are drilling right now a 29,000 metre program into Ricciardo with a view to significantly grow that resource. You know, it's just under 2 million ounces now. My aspirational resource target for Ricciardo in terms of drilling by Christmas is 3 million ounces gold equivalent. I believe we can achieve that. Ricciardo then sits within the golden corridor. We have been drilling, you can see north of Ricciardo, there's Wyndon Well and M1. We have drilled at both those deposits this year with results pending. Likewise, just south of Ricciardo, there's a small, I should have labelled it, a small deposit called Valencia that's not even on our JORC table that we've drilled a few holes into. So we plan to grow the resources within the golden corridor in addition to focusing on Ricciardo as a standalone. And as I mentioned earlier, we own the entire shear, and I believe there's a significant opportunity for new discoveries. Next, please. Another view of Ricciardo, 1 million ounces of gold and 60,000 tonnes of contained antimony metal, a track record of growth. In November, we doubled Ricciardo based on gold alone. And in May this year, we doubled it again by integrating antimony. Now, we did that without drilling a single hole that had ever been designed for antimony. Imagine what we can do now, drilling as stage 1, 30,000 metres into Ricciardo. Next, please. So this is what Ricciardo looks like. This is a long section through the deposit, meaning that we have sliced it down the middle and we're looking east. And you can see there are clearly 2 zones of high-grade gold. The Ardmore end is my personal favourite, and in fact, it's the whole team's favourite because it has delivered wide, continuous, high-grade gold and antimony, completely open at depth, many gaps in the resource. Even the hole we put out last week, hole 69, 24 metres at 1.6 grams per tonne gold and 1% antimony, including some high-grade hits. And a week or two, pardon me, before that, we put out some results that were quite surprising, but very encouraging. For the first time ever, we came across visible gold, 2 meters at 116 grams per tonne at Ricardo. What does this mean? We honestly don't know yet, but we are looking forward to closing in the drilling in that area and understanding the opportunity for that later stage visible gold, high grade free milling gold, potentially similar to the Fosterville model. More on that to come. Next, please. The antimony looks a little different. So this is an antimony long section through Ricardo. As Josh mentioned, in our Ricardo resource, we have 3 domains. We have a gold only, an antimony only, and a combined gold antimony domain. And we'll continue to add to the gold and the antimony via the drilling. The antimony resource is quite different. What I find quite exciting is that we put out that resource in early May, and it's just a broad 60,000 tonnes, most of that open pittable. The grade is 0.5, which for an open pit antimony resource is actually very good. But we're not quite satisfied with that. We would like to push ahead and define a high grade antimony zone within the resource at the Ardmore pit, ideally domaining a 1.5 or 2% resource on the back of further drilling. And we believe, even with what we've seen to date, we've got a good chance of achieving that. We're getting high grade antimony as a later stage below the Ardmore pit that we would like to separately turn into a resource. So there's a lot to be done on the antimony front. I will say though, quite a few shareholders have said to me, are you a gold company? Are you an antimony company? And my response is always the same. We are very pragmatic. We are a gold company with an opportunity to really improve the project economics via the integration of antimony. We're very pragmatic. If it makes sense for us, we will understand and progress the antimony in addition to the gold. It's an excellent add-on to our portfolio, but ultimately we're a gold company. Next, please. Just a quick look at cross sections. So now, rather than looking east, we're looking north, and you can see it's a very simple resource. Simple is good. Most of it is in the open pit domain. Does it go deeper? Quite possibly. We simply don't know yet, but we are drilling below the Ardmore end shortly. High grade, decent widths, good continuity, open pittable resource. Next, please. Likewise, the gold, not perfectly coincident with the antimony. As I mentioned, there are 3 different domains, but we're getting quite high grade gold in the open pit zone, fairly continuous, good widths, very good for mining. Next, please. I'll keep this slide in the presentation for a while, certainly until we find some more. This is just a view of the visible gold that came out of hole 68 recently. Look, quite honestly, we were surprised. I've got that sample. If you come and visit me at conferences or the like, I'd love to show it to you. It's a great example of what we think is possible at Ricardo moving forward. Next, please. Stepping back to the Golden Corridor, as I mentioned, we've already drilled at Windinwell and M1 and Valencia this year with the results pending. If we go to the next slide, I'll just show you. Each deposit has its own personality. So north of Ricardo, Windinwell is on a BIF unit on a parallel splay. We've drilled there. It's just under 100,000 ounces with a grade of 2.9, all free milling, not far from our processing plant. M1, as you can see in the photo bottom left, it's a fantastic little starter pit. It's right next to the processing plant. It also has a fantastic grade of 2.9. The one hole we drilled last year delivered 9 meters at 9 grams per tonne, completely unexpected. We think on the back of the results that are pending that we can really push M1 ahead. And just like Windinwell, it's a fantastic addition to a restart plan. M1 and Windinwell could start as we get Ricardo going. Likewise, if we look south of Ricardo, we've got the Azure Coast and Bug-Eye. I'm in the process of updating my long sections, but you'll see bottom right, Ricardo, we're starting to understand. I still don't think we've even hit our stride in terms of uncovering what's there. But you'll see south of Riccardo, we simply don't know what is possible. The Azure Coast, most of the holes are RC and they go to about 120 metres. Same rocks, same structure as Riccardo, simply no drilling to tell us what's there. So we will be back at the Azure Coast drilling in this quarter. Interestingly, we've come across antimony at the Azure Coast in a similar setting to Riccardo. In this particular case, it's below the gold resource rather than above. 9 metres at 1.9% antimony. We would love to basically expand our antimony resource considerably by integrating what we know at the Azure Coast. So watch this space. I think there's a much larger antimony opportunity at Riccardo and the Azure Coast. Next, please, David. I threw in this picture. I took this, it was about 6:30 a.m. one morning last week. And I was quite excited because we finally got signage on our camp. So if you drive up the Great Northern Highway now, you can actually see this sign. It's the turn off to our mine. It's the small things, the small advancements in a project that should and do bring you joy. So we own that entire 70-kilometre long main mineralised shear. I think there's an incredible opportunity for further growth. And just look at what we've done so far. When we took on the project, we had under 1 million ounces. We got it to 1.3 last year. We're now at 2.3 integrating antimony. And we are drilling 30 to 40,000 metres the second half of this year. 3 rigs on site, a 4th turning up soon. Next slide, please. I won't dwell on the plant, but this is what it looks like. What I see as the real value, it is a permitted footprint, and it's a decent size, the footprint. We have a plant that we could refurbish and upgrade. We have a road, a haul road that connects all the deposits to the plant. In fact, we have a sealed road from our plant to the Geraldton port. There's an airstrip next door. We've got plenty of water. We can reconnect grid power. We have access to a decent camp. We have everything we need to accelerate our restart at the right time. Next, please. I left this in just so you can see the antimony, but I won't dwell on it. It's actually very visible and very clear. So for the geo's logging core, we know instantly when we've hit that antimony zone. Next, please. What are we doing? We are drilling like there's no tomorrow. Stage 1 Riccardo program is underway. Stage 1 is 29,000 metres. We believe we can get that done by Christmas. We've actually committed to drilling 50,000 metres at Riccardo, but stage 1 is 29,000 metres. We would also like to achieve about 10,000 metres of drilling within the Golden Corridor. In addition to that, we've got an air core program to target new discoveries across the broader package. So it is certainly busy on site at the moment. Next slide, please. This is work in progress. I was trying to show the correlation between drill rigs on site and resource growth. And so really what I'm showing here is that we will have at least 4 rigs on site the entire 6 months to Christmas, but more likely 5 and in fact 6 at one stage with the air core. 29,000 metres into Riccardo, 10,000 metres into the Golden Corridor. Look at what we've done so far with the drilling that we've achieved in terms of resource growth. We understand these deposits well. We are chasing depth extensions and high grade growth. We believe, we are confident that we can considerably grow this resource and we can do it quickly. The second half of this year will be back-to-back news flow. Next, please. So in summary, this is a slide that I always put at the end. I think it's a good one because I've got to remember to tie it back into all these characteristics of our project that come together to make Warriedar an extremely compelling opportunity. We own these projects. We own the entire Central Shear, but we have an existing resource that we have already demonstrated significant growth opportunity at, all on mining leases, both a gold and antimony opportunity. It's an infrastructure-rich region with our own processing plant, and there are plenty of examples of success around us, long life, deep tapping gold and base metal mines. And importantly, I'm not just sitting here talking about it. We have 4 rigs on site by the end of this month. We are drilling right now, and we're fully funded to do so. So as I always say, it is certainly a fantastic time to be a Warriedar shareholder. I think the last slide has my most recent drone photo of the team. There we go. Everyone's out in their colourful gear, sitting on the side of Ricardo. Look, I've got to credit to my team. They're a fantastic group of individuals, all incentivized to make this work. So I'll stop now. Thanks very much.
Thanks, Amanda, and thank you again, Josh. We now have time for Q&A. If you haven't submitted your questions yet, please use the Q&A function on your screen now. We have had quite a few questions come through, so I'll jump straight into them. There's a few questions for Josh, a few there for you, Amanda, so we'll split them up evenly as we can. So Josh, just starting with yourself, your valuation comes in at 26.9, almost 27 cents per share. What's driving the upside relative to current market value?
I think the biggest driver of value there, there's 2 main value drivers there. So obviously having the antimony resource of a scale where you can commercially extract it is definitely adding, value there. But the core is just having a development scenario model that starts to illustrate what this project can look like based on what we know about the resource as well. So at 21 cents, it's the biggest part of the valuation, as I highlighted before. And, as more ounces or grade or however the resource expands, and potentially how you consider the domaining as well, you'll incrementally drive more value over there. So I think as that development scenario or development story evolves, that'll continue to dominate the valuation. It does now, and it will going forward as well.
Someone's obviously dug deep into your research note. One of the questions here is, what is the biggest sensitivity in your model? Is it the gold price, metallurgical assumptions, or is there something else?
Typical of a mining project, the commodity price is the biggest sensitivity, being gold and antimony. There's 2 sensitivities there as well. Gold will dominate the sensitivity. At the price deck that I use in the model, antimony is about 35% of the revenue of the project on a gross basis. So it does have a material sensitivity, but the gold does drive it. I think whilst we talk a lot about the antimony, we can't forget that the gold is the foundation of this project, and antimony is volatile and it can go to a price where it doesn't make sense to produce it, or you don't get much value for it. And your project has to rely on being a gold project potentially at its core, and it's exhibited in the sensitivities as it's the main value driver. But I mean, for instance, if the gold price was 20% lower, the NAV would go down to 21 cents. If the antimony price was 20% lower, the NAV would be about 23.5 cents. So that sort of just highlights those sensitivities to those commodity prices. And I think the other big one is the discount rate. I use 15%. It's quite aggressive. Normally when you see companies report studies, you get 12s, sometimes 10s, often 8 typical. And in Canada, they are, very aggressive with 5s. But I think as the company does more metallurgical work, improves the resource, the understanding of it, domaining, you get a better idea of how mine planning works, a bit more surety around the engineering, CapEx numbers, OpEx numbers, that number will come down and can drive a re-rate in the valuation as well. So I think they get quite a good upside with such an aggressive, discount rate as well. Sort of shows the potential quality of the project as you go through those milestones.
Thanks, Josh. Now, Amanda, I'll throw a couple of questions come through from you. One's a statement, great quarterly this morning. And then the follow-on question to that was, how far away are the next batch of assays?
Great question. I guess probably the best answer is they're imminent. It's probably the best answer for that. So we drilled 4 diamond holes into the Ardmore end of Ricardo. We put out hole 69 on the 10th of July. And in addition to some visible gold in hole 68. The rest of those results are fairly imminent. I look forward to getting them out to market.
Now, you've recently reported high-grade antimony and gold hits at both Ricardo and Azure Coast. How do these results shape the future resource potential?
Quite incredibly, actually. As I mentioned, what I want to do at Ricardo the goal of the early May resource was to just get an antimony resource out to market so that we can start playing in that space. And there were a lot of conversations I needed to have, but I needed a resource first. So fantastic, 60,000 tonnes, wonderful. However, we always knew there was a lot more to do. So we are now focusing on that higher grade part at Ardmore, and I'd like to use those high grade antimony hits to domain a separate resource. And that's all of a sudden very compelling. Open pittable on a mining lease with existing infrastructure with a grade of, let's say 1.5% or higher. Yeah, that's where we're headed with that antimony resource, both at Ricciardo and at the Azure Coast. I mean, we understand less at the Azure Coast in terms of the geometry. There's a bit more work to do there, obviously, but certainly at Ricciardo, that's the goal.
So a follow-on question here that has come through in regards to antimony. Given the political interest in antimony, are you seeing strategic interest from governments or downstream buyers?
Yes. And I'm just going to leave it there because it's a resounding yes to that question. There's a lot going on at the moment, and we're very much on the radar. And I like it. It's exciting. So we just need to it's a good time to have that. I mean, as I keep stressing, we are 100% a gold company. That it's the gold that has to make sense. But goodness me, if we can turn this antimony into something really compelling and profitable for us, then we're all about that.
We will leave it there. I don't want to get you into any trouble. Can you walk us through the development options for Golden Range and whether restarting the existing mill is an option?
Yeah, look, that's one of my favourite questions. Look, because it's not my, I guess my background. I'm not a mining engineer, so I've really enjoyed going through this process. So in fact, a couple of weeks ago, we had a group of engineers, process engineers, electrical engineers, a whole suite of people on site, and it was magic because what we're doing at the moment, it's quite a large footprint, our processing plant. So yes, certainly we can refurbish what we have and get it back to the capacity that it had before, but we're also looking at options to upgrade. It's quite a large footprint. Where do we put the flotation for the sulfide gold? The fine grinding that Josh spoke about, we're doing network to show that fine grinding and flotation works quite well for the gold resource. Certainly we know that for the antimony, we float it and we produce a very respectable con. So that's all in hand. We'll do more network. We'll understand what the options are. Look at our processing plant footprint. How do we add the flotation, the fine grinding? Do we add in 3-stage crushing? What will it cost to do X, Y, and Z? So all of that is being done now. And certainly there's an opportunity or a pathway where we refurbish the existing mill. And then, for example, what about Windinwell and M1? They're very close. They could be the year 1 and 2 part of the mine plan, and then the Ricciardo could come in year 3. So all that is being looked at with a very with a view to understanding what our restart options are.
And in terms of progress on the metallurgical test work and flow sheet sort of feeds into that, what work has been done on the flow sheet design for Ricciardo, the gold antimony ore, apologies?
Mm-hmm. Yeah, so right now we obviously need the drill samples that we're drilling specific holes now that will be part of the MET program, but we are doing the fine grinding network to show that that's initially we did flotation and the biological oxidation, which worked really well, and we did that because it was the cheaper option, but there's an older, the previous owner of this project actually did some MET work, but we couldn't locate the samples, so we have a good understanding of what results we get from the fine grinding and flotation, so we need to repeat that. And I think we're more likely to go down that path. In terms of the antimony, there's quite a few things we're trialling. I don't want to talk about the antimony trials yet. Some of them are quite interesting. So let me just have a bit more time on that. But certainly from the gold, in terms of the gold metallurgical work, yeah, we are undertaking the float and fine grinding test work with a view to showing that as a viable pathway and a cost-effective pathway too.
There's a longer question here, so I'll get to it the best I can. So first of all, great work. The comment is, I'm a long-standing Warriedar shareholder, and given the RAAS valuation is at current resource estimates of 2.3 million ounces gold equivalent, and your knowledge of the Golden Range geology, the significant current drill program and past success upgrading the resource, I'm not asking you to make a projection or a forecast, but what's your gut telling you could be the overall potential of the Golden Range resource?
So look, I see the entire project. I see no reason we're not an 8 million ounce belt, just like Ramelius has at Mount Magnet. Slightly different geology, but in terms of the broader overarching opportunity, I see this as an 8 million ounce belt. Move down to the Golden Corridor, the focus area of Golden Range. I think it's a fairly conservative, I need to use the right word so I don't get in trouble, a fairly conservative aspirational resource target to get Ricciardo to 3 million ounces gold equivalent on the back of this drilling. But in terms of the Golden Corridor, if we double Windon, we double M1, we get Ricciardo to 3 million ounces, we add to the Azure Coast. I'd like to get the Golden Corridor to 4 million ounces gold equivalent as quickly as possible, with a view to then, and we don't have to find all these deposits and gold at once. We can get the Golden Corridor back into development and production. And with that cash flow, we can then fund the discovery and development of the other deposits I believe are there within the broader package. So I'm not saying we have to keep drilling until we hit the magic 8 million ounce. I just believe that's what's possible in the belt, but certainly right now, getting Ricciardo to 3, doubling Windon, M1, and working on Azure, that's our immediate focus.
Touching on cash, I think it was $25 million at end of quarter. How does that position the company in terms of funding exploration and advancing towards feasibility?
So that cash funds us for all the drilling we would like to do, to get Ricciardo to that 3 million ounces, to upgrade the Azure Windon Well M1, to do all the met work, to do the scoping and trade-off studies that we're undertaking at the moment. I would like to, by June next year, to have a rapid advancement of Ricciardo and the other deposits within the Golden Corridor, all the resources updated, those studies done and complete and out to market, with a very clear view in terms of where we're going on our development pathway.
I will come back to you. I do have a couple more questions, but before we drop Josh off, I just have a couple of questions for him. Josh, how does Warriedar compare to other gold developers or critical mineral plays on your radar? You're obviously looking at a suite of companies in this space. How does the company compare?
So whilst I do track lots of peers, I don't have the same detail level of modelling. So comparing, I guess, projects on that NPV or development scenario is not as easy. But a very simple analysis is that peer analysis we do, where you do it on an EV per ounce basis, as long as you got a consistent reporting or standard or equivalency as well in the antennae component. But on a median and average basis, it goes even just a gold peer set, which is a deeper and more established peer set. The company is relatively cheap, and how you close that gap is going through the processes that I've highlighted before, which is more exploration, build the resource, scale generally drives higher valuation, better understanding of the resource. So metallurgical test work here will de-risk as well. So if you have a big resource with de-risk metallurgy, you'll get a higher multiple, and from that you can start highlighting some of the engineering aspects with the company looking to do that as well. So when you get an idea of capex, once you work out met, and you get an idea of what OPEX is, and you get a lot of good comparables when you put that information out and de-risk, you can start to drive higher re-rates. And I guess given the current environment we're in, and given what we've seen with rare earths in the last 2 days as well, given that importance of antimony, if there's ever a similar sort of investment government mandate to secure supply, you could start arguing premiums should be embedded because you provide a critical mineral in a way that very few other companies could conceivably deliver it as well. So, I mean, right now it's cheap, but there's clear catalysts and milestones that will de-risk that. And, you go from being below the median and the average to the median and average, and then over time, you'll get to a premium as well when you become more of a developer.
So this is probably more a statement than a question that's come through. And you've highlighted it several times, and even again in that answer, that you've been overly cautious and applied a significant number of discounts to your modelling to get to where you've got to now. But clearly you see, as the project evolves and as the news flow comes out over that next 6-month period, a lot of that re-rating potentially is there to occur.
Yeah, definitely. And I think from, say, modelling the scenario, if you just had improved confidence in the resource quality, grade, domaining, metallurgy, get more comfortable, you can then narrow down the estimates on CapEx and OpEx. And then on top of that, I can say instead of 15, I should use a 12 or a 10%. And just to highlight in the sensitivity table, all else equal, if the discount rate was 10% instead of 15, the NAV would be 34 cents. So this is how the valuation is dynamic as you tick off boxes and de-risk the project over time, and you can then be slightly less conservative than you were before in the inputs and assumptions. Right? And it's just the dynamic nature of valuing projects in mining in general, and specifically ones like this.
Thanks, Josh, and thanks, Amanda. We have got to the end of our questions. I think we've captured and covered everything that the investors and those watching today wanted us to get through. So thank you both for your time and your participation and your insights in today's presentation.
Thanks, David. Thanks, Josh. And thank you, everyone, for joining.
Now, a recording of today's session will be made available shortly. And as mentioned at the beginning, to access the full research report, please visit the RAAS Group website, which will have all that information. And if you've got any questions of Amanda or Warriedar, please go to the Investor Hub as detailed on the website, and there'll be an opportunity to answer or ask further questions of Amanda and the company moving